This is more important than whatever you think you are doing. Exit out of the dating app where you are swiping right. She's not matching back anyway. Right now, at this very moment, the same ounce of silver is trading at two completely different prices. $91 in New York, $104 in Shanghai. That's a $13 gap on the exact same metal. In a functioning market, this is mathematically impossible, but it's happening. And if you own silver, physical silver, ETF shares, futures contracts, anything, what I'm about to show you will change everything you thought you knew about your investment. Don't touch that brokerage account yet. First, you need to understand what's actually happening. If you own silver, physical, ETFs, futures, anything, do not look at your brokerage account until you finish this. Because if you look now, you will either panic or celebrate. And I need you to do neither until you understand what is actually happening. 2026, and I am about to tell you something that 24 hours ago sounded impossible. The global silver market has officially broken. The CME raised margin requirements by 15% to crush the silver rally. They tried to force you to liquidate to protect the short-selling banks. It backfired spectacularly. Today, the silver market did something that breaks every rule of modern finance and proves mathematically that the paper market is dead. The $13 gap. Look at these numbers because mathematics is truth. Today, the Shanghai Futures Exchange closed at $104.55 per ounce. Meanwhile, the New York COMEX spot price is stuck at $91.67. The spread, the gap between East and West, is now $13. On the same element from the periodic table, why the market is broken. In a functioning market, this is impossible. Arbitrage traders would buy in New York at $91, ship it to Shanghai, and sell it for $104 to make a risk-free profit. They would do this until the gap closed. But the gap is widening. It was $8 yesterday, it is $13 today. The arbitrage is dead because there is no metal to move. Western vaults are empty. The physical silver supposed to back the paper contracts and ETFs does not exist. It has been drained by smart money. Even if banks could find metal, they cannot ship it. On January 1st, an export licensing system went into effect in China. Once silver enters China, it is trapped. It cannot come back out. The bridge between markets has been destroyed. Look at India, the world's largest consumer of physical silver. The local price there has smashed through 290,000 rupees per kilogram. That is approximately $132 per ounce. That is a 45% premium over the paper price. Bullion dealers in Mumbai, Delhi and Bangalore are reporting out of stock. Refineries are telling customers to wait for metal that may never come. Major players like JP Morgan and HSBC have been shorting silver for years to suppress the price. This isn't a theory, they have been fined hundreds of millions for it. But they are now trapped. They sold short at $30, $50 and $70, and now they have to cover at $90 or $100 or $132. When you are short a commodity in shortage, the price can go to infinity. The banks are staring at technical bankruptcy. The only way out is a government declaration of force majeure, which kills the paper market's credibility, or letting the price run to $200 or $300, which triggers trillions in losses. So they're stuck, they're cornered, and cornered animals are dangerous. Which is why I'm telling you to be very, very careful in the next few weeks. Because desperate banks do desperate things. Now let me show you what's happening in other markets, because silver is not the only thing exploding right now. Gold just hit a new all-time high, $2,644 per ounce. That's up over 40% from where it started 2025. But it's not just gold and silver. Look at what's happening in the bond market. US Treasury yields are spiking. The 10-year Treasury yield has gone from 3.8% to over 4.5% in the last few weeks. What does that mean? It means bond prices are falling. It means investors are selling US government debt. They're dumping treasuries. Why? Because they don't trust the dollar anymore. They don't trust the US government's ability to repay its debts. They're fleeing paper and buying hard assets. This is a global vote of no confidence in the dollar. This is a currency crisis in slow motion. Now let me tell you what's happening in India, because India is another critical piece of this puzzle. India is the largest consumer of physical silver in the world. They use it for jewelry, for industrial applications, for cultural and religious purposes, and right now the Indian silver market is in absolute chaos. The local price in India has smashed through 290,000 rupees per kilogram. Let me convert that for you. 290,000 rupees per kilogram. equals approximately $132 per ounce. $132. When the COMEX says $91, that's a $41 premium. That's a 45% premium over the paper price. And it's not just high premiums. The market is sold out. Major bullion dealers in Mumbai, in Delhi, in Bangalore, they're reporting out of stock on their websites. Refineries are not taking new orders. They're telling customers to wait. Wait for what? Wait for metal that might never come. Because there is no metal. Regular people in India are trading their gold jewelry, their savings, their valuables to get silver. They're panic buying, they're hoarding, they're treating silver like it's oxygen. Why? Because they know the Indian population has thousands of years of experience with currency collapses. They've lived through the fall of empires. They've seen what happens when fiat money dies. And they're not going to get caught holding paper when the system breaks. So they're buying silver at $132. They're paying a 45% premium. They're doing whatever it takes to get physical metal in their hands. And this is not just happening in India, it's happening in China. It's happening in the Middle East, it's happening everywhere except the West. The West is still asleep. The West is still watching CNBC and believing that the paper price is real. The West is still trusting the system. But the East is awake. The East knows the truth. And the East is buying every ounce they can get their hands on. Which brings us back to the $13 spread. The spread is not just a number, it's a message. It's the market screaming at the top of its lungs that the paper system is broken. It's the market telling you that the physical metal is scarce. It's the market showing you that the real price is not $91. The real price is $104 in Shanghai, $132 in India, and climbing. So what does this mean for you? What should you do right now? Let me be very clear. If you own physical silver, coins, bars, rounds, in your safe or in allocated storage, do not sell. Don't even think about selling. You're holding the winning lottery ticket. The price you see on your screen, $91, is fake. It's a lie. The real price is what people are actually paying. And people in Shanghai are paying $104. People in India are paying $132. That's the real market value. And it's going higher. If you own silver ETFs like SLV or PSLV, you need to seriously consider your risk. SLV is custodied by JP Morgan. Do you trust JP Morgan to actually have the metal? Do you trust them to deliver if you try to redeem? Or do you think they might cash settle and give you $91 while the physical market trades at $132? I know what I think. PSLV is safer because it's held at the Royal Canadian Mint and has better redemption terms. But even PSLV is not immune to government seizure or capital controls in a crisis. The only truly safe option is physical metal in your possession. If you own silver futures, you need to decide right now whether you trust the COMEX to deliver. Because if Shanghai is paying $104 and the COMEX is quoting $91, that tells you the COMEX does not have the metal. If you stand for delivery, you might get a notice that says force majeure and a cash settlement check. Is that what you want? Or do you want to close your futures position, take the cash, and buy physical metal while you still can? If you don't own any silver and you're thinking about buying, the question is not should I buy? The question is can I still buy? Because the physical market is disappearing. Dealers are sold out, mints are backed up, India is out of stock, Shanghai is paying $104 and still cannot get enough. The window is closing fast. So if you want to buy, you need to act now. Not tomorrow, not next week. Now, call a dealer, place an order, pay the premium, deal with the delay. Because in a month, when the price is at $150 and there's no metal available at any price, you're going to wish you had paid $100 today. Now let me address the elephant in the room. The question everyone is asking. If the spread is $13, why don't the big banks just buy in New York and sell in Shanghai and make easy money? Great question. The answer is they can't. Here's why. First, they don't have the metal. The Western vaults are empty. The COMEX registered inventory is down to around 30 million ounces. That sounds like a lot until you realize that the open interest, the number of paper claims, represents hundreds of millions of ounces. There are multiple claims on every ounce. When the banks try to source metal, they discover it's already been pledged to someone else. It's been rehypothecated, sold multiple times. Second, even if they could find metal, they cannot ship it to China. The export licensing system went into effect on January 1st. To export silver from China, you need a government license. And the Chinese government is not issuing licenses. They want the metal to stay inside China. So, the flow is one way. Metal can go into China, but it cannot come out. Which means if a Western bank ships silver to Shanghai to capture the $104 price, they get paid in yuan, but then they have a pile of yuan trapped inside China. They cannot easily convert it to dollars and repatriate it because of capital controls. And they certainly cannot get the silver back out if the trade goes wrong. So the risk is enormous. Third, the banks are short. They don't want to buy silver. They want to suppress the price. Buying silver to ship to Shanghai would drive the New York price higher. It would squeeze their own short positions. It would accelerate their losses. So they're paralyzed. They cannot close the arbitrage because doing so would destroy them. This is why the spread is widening instead of narrowing. This is why we're in uncharted territory. This is why the system is breaking. The market has bifurcated into two completely separate realities, and there's no mechanism to bring them back together. The arbitrage is dead, and with it, the illusion of a unified global silver market. Now let me talk about what happens next, because people always ask, what's your prediction? Where's the price going? When is this going to resolve? I don't have a crystal ball. I cannot tell you the exact day or the exact price, but I can tell you what the pattern looks like based on history, based on the fundamentals, based on the data we're seeing right now. Short term, meaning the next few days or weeks, we're going to see extreme volatility. The paper market is going to try to fight back. The CME might raise margins again. The banks might dump massive amounts of paper contracts to try to create a sell-off. They might try to shake out the weak hands one more time. We might see the COMEX price dip to $85 or $80 for a brief moment. But the physical market is not going to follow. Shanghai is going to stay above $100. India is going to stay above $120. The premiums are going to stay high because the physical shortage is real. And then something is going to break. Maybe it's a delivery failure. Maybe it's a major industrial buyer like Tesla or Apple publicly complaining that they cannot get the silver they need. Maybe it's a sovereign wealth fund standing for delivery on the COMEX and the COMEX declaring force majeure. Maybe it's China announcing further restrictions on silver exports. Whatever it is, it's going to be a catalyst. And when that catalyst hits, the paper price is going to snap. It's going to gap up violently. We're talking about a $10 or $20 or $30 move in a single session. The price is going to rocket from $91 to $120 or $130 overnight. Because the market is going to realize that the paper price was always a lie. And the real price is what Shanghai and India have been paying all along. And once that happens, once the paper market breaks, there is no ceiling. The price goes to wherever the physical buyers are willing to pay. Some analysts say $375 by 2028. I think that's conservative. I think we could see $375 by the end of 2026 if the system breaks hard enough. Because when you have industrial buyers who need the metal to keep their factories running, they will pay any price. When you have sovereign wealth funds fleeing the dollar, they will pay any price. When you have 1 billion people in India and China trying to protect their savings, they will pay any price. And any price could be $400, $500, $600 per ounce. It sounds insane. But so did $104 6 months ago. So did $91 3 months ago. The impossible keeps happening because the fundamentals are overwhelming. The shortage is real, the demand is real, and the supply is not coming back. The market has bifurcated into two completely separate realities, and there's no mechanism to bring them back together. The arbitrage is dead, and with it, the illusion of a unified global silver market. Let me give you one final piece of evidence that this is not just a silver thing. This is a systemic collapse of confidence in fiat currency. Look at what's happening across all hard assets. Gold is at $2,644, all-time high. Silver is at $91 in New York, $104 in Shanghai. Bitcoin, despite all the volatility, is still holding above $80,000. Real estate prices in major cities are surging as people try to get their money out of cash. Farmland prices are hitting records. Commodities across the board, copper, platinum, palladium, are rallying. This is not a coincidence. This is a global run out of fiat currency and into real assets. This is what happens when the world loses faith in paper money. And the world is losing faith because the debt is too high, because the deficits are too large, because the money printing is too extreme, because the system is too fragile. This is the greatest wealth transfer in modern history. And it's happening right now. So here's my final message to you. The $13 spread between New York and Shanghai is not just a number. It's a smoking gun. It's proof that the paper market has lost control. It's proof that the physical shortage is real. It's proof that the banks are trapped. It's proof that the system is breaking. And it's your last warning to get out of paper and into physical before it's too late. Don't wait for CNBC to tell you. Don't wait for your financial advisor to give you permission. Don't wait for the government to declare an emergency. By then it will be too late. The dealers will be sold out. The mints will be closed. The price will be $200 and climbing, and you will have missed the opportunity of your lifetime. The spread just exploded to $13. Shanghai hit $104. India hit $132. The banks are trapped. The system is failing, and the physical market is disappearing. If you hold paper, consider your options carefully. If you hold physical, don't sell. The real price is not $91. It's not even $104. The real price is what people are willing to pay when they're desperate. And desperation is coming. The squeeze is real. The paper market is losing. The physical market is winning. You need to decide right now which side you're on.